Ladies and gentlemen, good morning. Welcome to the second edition of the Singapore FinTech Festival. Thanks to all of you, this is the largest gathering of global FinTech community anywhere in the world. We have more than 25,000 participants from across 100 countries. And what a great way to start. The absolute treat to have Joy Ito from the MIT Media Lab give us that big picture, starting from the whole Earth down to the systems that are powering our FinTech revolution. The future is already here. The world is becoming more digital. The changes have, if anything, accelerated, went beyond what we had expected last year when we met here, and especially here in Asia. According to Bain & Company, in the past year alone, the number of online engaged consumers in Southeast Asia surged by 50% to 200 million people. And FinTech, or the application of technology to financial services, is at the forefront of this digital renaissance. Research by Ernst & Young tells us that FinTech has already achieved initial mass adoption and is now poised for mainstream adoption. 1 in 3 digitally active users globally consider themselves regular users of FinTech services. In China, that figure is nearly 70%. Singapore's FinTech journey is set against this emerging digital future. It's also a part of Singapore's broader Smart Nation agenda to harness the power of technology to support better living, increase productivity, and create new jobs. Globally, the financial industry is facing slower economic growth, tighter regulation, and keener competition. It needs to foster innovation and transform itself in order to succeed and thrive. And this means harnessing technology to increase efficiency, to manage risks better, to create new opportunities and improve people's lives. And if Singapore is to maintain its position as one of the top financial centers in the world, it must embrace FinTech, maximizing its benefits and minimizing its risks. And so for the last 2 to 3 years, the Monetary Authority of Singapore, the MAS, has been working closely together with the industry to foster a thriving FinTech hub. Now, this requires getting several pieces right. 1, to create an ecosystem of diverse players, both competing and collaborating. 2, an open architecture economy that enables connectivity and innovation. 3, a web of international links to promote the exchange of ideas and to scale solutions. 4, a strong talent pool and deep research capabilities. 5, a conducive regulatory environment. And last, a safe and secure cyber environment. Ecosystem. We want to create an ecosystem for innovation where the established financial institutions and the FinTech startups compete as well as collaborate. Financial institutions are no longer the laggards and technology dinosaurs of popular myth. I know this from my conversations with the CEOs of many of the global banks and insurance companies. Almost every major financial institution today has an active innovation agenda to strengthen business by harnessing technology. Many of the CEOs today can carry on a reasonably intelligent conversation about blockchains without looking at their notes. This is a big change from just 2 years ago. Singapore wants to be the place where these financial institutions test, develop, and apply new technology solutions. Just in the last few years, global MNCs have set up more than 30 FinTech innovation labs or research centers here in Singapore. The FinTech startup scene has gotten a lot more vibrant. There are more than 400 FinTech enterprises now setting up base in Singapore. These startups are experimenting with new ways to pay, to save, to invest, to buy insurance, plan for retirement. No innovation ecosystem is, however, complete without physical spaces for experimentation and collaboration. Last year, we saw the launch of Lattice 80, Singapore's first FinTech innovation village, 2 whole floors of the building at 80 Robinson Road. Well, this year, the entire building at 80 Robinson Road will now become a FinTech innovation hub. It'll be renamed 80RR, and that's 100,000 square feet dedicated to housing FinTechs right in the heart of the financial district. Smart nation needs an open API economy. Application programming interfaces. These are the connectors that allow systems to talk to one another, enabling service providers to harness information from multiple sources and produce holistic solutions for customers. The MAS has been encouraging FIs, financial institutions, to develop and share the APIs openly so that they can work with other service providers to give customers a richer and more seamless experience. We're very pleased that more banks in Singapore are opening up the APIs, yielding tangible benefits to consumers. To date, more than 270 open APIs have been made available by Singapore financial industry. Third, a network of international links. By the end of this week, the MAS would have signed 16 FinTech cooperation agreements with governments from all around the world. These agreements facilitate information sharing on FinTech trends as well as regulatory issues. It also has a referral mechanism that supports Singapore FinTech startups in overseas markets and facilitate overseas startups to set up in Singapore as a gateway to Asia. Some of these cooperation agreements also include joint innovation projects. And this is important, that this is a collaborative effort. Let me give a tangible example. Singapore and Thailand have each developed their own systems for making payments from one bank account to another in real time, 24/7. We call our system Pay Now. Thailand calls theirs Prompt Pay. Well, the MAS and the Bank of Thailand have agreed to work together to link Pay Now and Prompt Pay. The aim is to enable someone in Singapore to send money to someone in Thailand and vice versa using just mobile numbers, instantly, securely, at any time of the day. And we need to have more of such link-ups across Southeast Asia. To sustain our FinTech efforts, we need a strong pipeline of talent and research capabilities. I'm really pleased to announce that MAS and the Massachusetts Institute of Technology, MIT, have agreed to enter an R&D collaboration in FinTech. This will enable our local FinTech talents to work alongside world-class researchers at MIT's Media Lab to come up with technology solutions to real-world use cases. We will run pilots using distributed ledger technology, cryptography, quantum computing and big data, artificial intelligence, and machine learning. One area we want to make a concerted effort is data analytics and artificial intelligence. So MAS is launching a $27 million artificial intelligence and data analytics grant. This is part of the $225 million financial sector innovation, technology and innovation scheme. This new grant will support the adoption and integration of AI and data analytics in financial institutions in Singapore. Just as important, it will also be used to help professionals in the financial sector to upskill and adapt to the use of these new technologies. One of the most critical pieces that we must get right on a continuous basis is regulation. How can we make regulation conducive to FinTech innovation while still ensuring that the system remains stable, key players are sound, and the interests of consumers are safeguarded? This requires a keen understanding of emerging technologies and new business models, being alert to potential risks while taking care not to stifle innovation. Easier said than done. One example of how MAS has tried to strike the right balance between these: virtual currencies, or commonly known as cryptocurrencies, which you've just heard quite a bit on. As of now, MAS does not regulate virtual currencies. In fact, we welcome them as an innovation that can potentially reduce the cost of some financial transactions. But we do regulate the activities that surround virtual currencies if these activities pose specific risks. First, virtual currency transactions could potentially be exploited for money laundering or terrorism financing due to the anonymous nature of the transactions. So intermediaries in virtual currency services will be subject to anti-money laundering requirements. Second, as we have now seen, virtual currencies can go beyond being just a means of payment to representing ownership of assets, as we are now beginning to see in many initial coin offerings or ICOs, which Joy also spoke about. It makes them look very much like a share or bond certificate. So if a digital token is structured like a security, looks like a security, smells like a security, then the initial coin offering must meet the requirements of our Securities and Futures Act. And this is to protect investors. And we've heard earlier on how investors can be beguiled by some of these new innovations. So it's a careful balance. FinTech developments are forcing regulators everywhere to review the way regulation is done. If FinTech is unbundling financial services value chain, then regulators need to think hard how they can also unbundle their regulations. I suspect we will have to take a more risk-specific approach and an activity-based approach with respect to FinTech. This means setting thresholds for when regulation kicks in. It means calibrating regulatory requirements to specific identified risks. 3, and applying these requirements to activities rather than entities. A good example of our attempt to try to do this is the new Payment Services Bill, which we'll publish for consultation next week. Licensees will be regulated according to the activities they conduct, because different activities pose different risks. And we will move away from an entity-based approach in regulating payment service providers. Final part of the overall strategy, cybersecurity. As we go more digital and online, cyber risks will mount. And if risks are not managed well, if cyber risks are not managed well, the public will lose trust and confidence in technology. And this will be bad. To fully harness the benefits of digital technology, we must build robust cyber defenses and have effective remediation plans when things go wrong. And things will inevitably go wrong. First, cyber intelligence and information sharing. We are very pleased to see the official launch in Singapore of the Asia-Pacific Regional Information and Analysis Center by FSI-ZAC. Some of you know FSI-ZAC, or the Financial Services Information Sharing and Analysis Center, is a global intelligence gathering and sharing initiative for the financial sector with more than 7,000 members worldwide. The new center in Singapore will facilitate sharing of cyber threat information in a timely manner and enable rapid and coordinated response to emerging threats. Second, MAS is reviewing its technology risk management guidelines. We do this regularly, but this time we're doing it differently. For the first time, MAS is partnering the Association of Banks in Singapore to co-create the guidelines. We will develop cyber risk management guidance with the industry for the industry. Excuse me. Third, penetration testing. MAS already requires key financial institutions to conduct penetration testing of cyber defenses by independent third parties. We need to go further. The MAS is now partnering the Association of Banks in Singapore to establish guidelines for red teaming to enhance cybersecurity testing. Red teaming is covert penetration test conducted on a financial institution's live environment, its people, its processes, and its technologies, to assess the ability of the financial institution to respond to infiltration attempts. This is not easy to do, and so we'll have extensive consultations, but we think it's necessary that we do more realistic penetration tests given the growing cyber threats out there. I cannot emphasize enough how mission-critical cybersecurity is to the overall FinTech agenda or even the overall Smart Nation agenda. I've described some of our strategies. Now I want to highlight 5 specific FinTech projects in Singapore that could prove potentially transformative in solving real-life problems. First, solving the Know Your Customer, or KYC problem. KYC is one of the biggest pain points in the financial industry. It is an obligation in any customer onboarding, but the process is costly, laborious, duplicative, and still not all that effective in detecting money laundering or tax evasion. The government has taken the first step with MyInfo. This is a single platform containing personal data submitted to and verified by the government. And so the MAS and the Government Technology Agency of Singapore, GovTech, have done a pilot with several banks to enable consumers to open bank accounts online using the MyInfo platform. The pilot has been reasonably successful. It saw application timings shortened by as much as 80%. Now we're taking the next step. MAS is closely working with the local and foreign banks here in Singapore to explore a comprehensive banking KYC shared services utility. Quite a mouthful. Basically, it means we want to streamline end-to-end KYC process. This means centralizing some processes as a utility. Processes like leveraging on MyInfo for customer identification and verification, collecting and validating KYC documents, and screening against sanctions and blacklists. The banking KYC utility is potentially a transformative project if we can pull it off. It will harmonize and enhance KYC checks across the financial industry. It will improve the quality of risk management while reducing the cost and time taken to do so. If all goes well, we hope to see the utility in place next year. To be safe, I'll say end of next year. Another area that could do with transformation is trade finance. Today, this process is largely paper-based. It's not only inefficient, but increases risks such as fraud and duplicate invoicing. Blockchain technology offers good promise to make trade finance safer and more efficient. We've seen a couple of successful proofs of concept already. Now we're going to build on this. The MAS and the Hong Kong Monetary Authority will jointly develop the Global Trade Connectivity Network. This is a cross-border platform for trade finance using distributed ledger technology. The Global Trade Connectivity Network, or GTCN for short, will be open architecture platform. It will enable seamless transfer of digital documents and data, trade data across borders, and we will start with the Singapore-Hong Kong trade corridor. Again, if all goes well, we expect GTCN to go live in early 2019. It's not only the financial industry that needs FinTech, but regulators as well. We have our own share of inefficiencies. And so the MAS has embarked on its own internal FinTech journey to make supervision more effective and the compliance burden that we impose on financial institutions less painful. We call it supervisory technology, or SupTech for short. One example, detecting trade syndicates in the stock market. This is one of the most difficult things to detect in any market, collusive behavior and price manipulation. So we put in place data analytics and pattern recognition systems to study trading behavior and detect accounts that may be acting in concert to manipulate share prices, or engaging in circular trading to create a false impression of market interest. Another example, we are now working on data analytics system to scour through the 3,000 suspicious transactions reports that financial institutions file each month on money laundering or terrorist financing risks. Obviously, this would need deep technology to analyze and do a good job of, rather than manual processes. A major source of pain for financial institutions is regulators requesting for the same data more than once under different data collection exercises. Like I said, we have our own inefficiencies. We will fix this. By taking a more cohesive approach to how we organize data, the MAS will aim to achieve, and this is a target we've set for ourselves, we'll aim to achieve zero duplication in our data requests to financial institutions. If we ask for the same data twice to any bank, you will be allowed to gently turn us down. We will work with industry on making this a reality. And saving the best for the last, on SupTech, the MAS will transform the way it collects data from financial institutions for supervisory purposes. Today, financial institutions' data submissions to the MAS often involve manual processes to extract the information from their respective databases and fill up an MAS-provided form or template. And over at the MAS, processing the data is also done manually. There is a lot of cut and paste. Now, we will make this more painless. We have set a goal. All data requests from MAS will eventually be in machine-readable templates. This means the requested data will flow seamlessly from the financial institution's databases to the templates and ultimately seamlessly to the supervisory dashboards of MAS officers. No human intervention, focus on analytical work, no more cut and paste. Again, we'll work with industry on an implementation plan and what a reasonable timeline for doing this might be. Next, we need to reimagine a more efficient and secure way to conduct cross-border interbank payments and settlements. Cross-border payments today rely on a very complex network of correspondent banks. Banks hold balances with one another, and settlement occurs by adjusting these balances. There is counterparty risk, liquidity is split, and reconciliation is a major pain point. This is why cross-border transactions, payments and settlement transactions, often take days and at high cost to customers and to the banks. This is a problem that Project Ubin seeks to solve, using distributed ledger technology to enable entities across different jurisdictions to make payments directly with one another, without intermediaries, with much greater speed and efficiency, and at lower cost and risk. This is not an easy problem to solve, but we've made some progress. Last year, phase one of Project Ubin demonstrated that banks could conduct interbank payments without going through the MAS, using a blockchain-based digital representation of the Singapore dollar. Phase two, just recently concluded, successfully produced 3 software prototypes that achieved decentralized netting of payments while preserving transactional privacy. And this is an important achievement. MAS has received keen interest on Project Ubin from many parties, including academia and other central banks. We are committed to share what we have learned, to encourage others to take a crack at solving this problem, which is a universal problem. So we've just published a report on phase 2 of Project Ubin. More significantly, MAS will release publicly, free of charge, the source codes for all 3 successful prototypes from Project Ubin phase 2. Please take a look at the prototypes, study them, build upon them, critique them. What's next? We're now preparing to extend Project Ubin beyond Singapore. So we're pleased that we now have a collaboration on cross-border payments with the Bank of Canada using blockchain technology. Finally, we want to use FinTech to deepen financial inclusion across ASEAN. MAS and the World Bank's International Finance Corporation, IFC, have teamed up to establish the ASEAN Financial Innovation Network, or AFIN. The goal of AFIN is to help banks and fintechs in ASEAN to collaborate, to broaden and deepen access to digital financial services across ASEAN. AFIN works on a cloud-based industry platform, which will do three things. It will allow banks to search for and connect to innovative fintech offerings. It will give fintech firms the opportunity to scale up across borders. And it will also provide an industry sandbox to test cross-border solutions. And regional regulators will be invited as observers, and they have been supportive. Most of all, AFIN will provide a powerful platform to extend financial services to millions of underbanked people in ASEAN. Singapore is on its fintech journey because we want to make pervasive a culture of innovation in financial sector. We must have a restlessness to make things better, a spirit of enterprise to try new ways, a willingness to take manageable risks. Most of all, a resilience to bounce back from failure to try again and again. But fintech must also safeguard trust and confidence. Trust is the foundation of the market economy. And in financial services and the digital economy, trust is absolutely critical. Customers must have the confidence that systems are reliable, that their transactions are safe, that their data are secure, and the service offerings they get are in their best interest. So not everything that goes under the rubric of fintech has been able to meet these standards. There is some hype, there are scams, and we need to be watchful so that it does not destroy people's trust and confidence in what technology can do for them. Finally, everything we do in fintech must have a larger purpose. Ultimately, it must solve real-world problems so that people's lives are better off, so that deserving small and medium enterprises can get financing to grow their business, so that migrant workers, and there are millions of them, can send money back to their families cheaply, quickly, securely, all basic needs, so that people can plan their finances holistically, taking account of the range of their needs in one comprehensive manner. This room is filled with innovators, investors, business leaders, policymakers from around the world. Together, we can recreate finance with technology and innovation. And as Tennyson puts it, come, my friends, it is not too late to seek a newer world. Thank you very much.